In this video, I'll be sharing with you the 2 candlestick pattern I use for trading gold as a day trader and the single indicator I applied. Remember, gold is highly volatile, and that is why this indicator is very much perfect when it comes to trading gold. Most often, it is hard you see gold asset ranging. So gold is always on a move, either in an uptrend or a downtrend. So yours is to get a system that can help you profitable in trading this. And that is why exactly I'll be sharing this with you. So on this indicator window is my moving average 20. So you can see the period is 20, the shift is 0, the method is exponential, and then you apply it to close. This is the only indicator you will be using for your entry confirmation. And of course, if this is 4-hour time frame, so when you see your price trending above this, it shows you are in an uptrend. When it's below it, it's in a downtrend. Now, whenever price is in a healthy trend, price will always trend above the 20 period moving average. And anytime price has gone too far, look at this, the moving average is here now, right? The moving average is here, and then price is here. Anytime price move very far away from the moving average, there is a tendency that price will do what? Price will pull back towards the moving average before it will continue again back to the upside. So our entry is targeted on this pullback of price towards the moving average. That is where we'll be looking for the entry confirmation for us to buy to the upside. Remember that price in this scenario, you see the price pull and then price break out of the moving average here. When you see this scenario, it is not a change of trend. You are considering this moving average as a zone and not a line. So for a break of trend to occur, price should be able to retest this moving average, continue to the downside before you can confirm that it is a break of trend. So having established that fact, now we know that we are in an uptrend. Remember, you don't trade this in isolation. You will need a price action, which is the candlestick, in order to confirm your entry. Because most of the challenge we make is trading in isolation. And number 2 is that you must trade in line with the trend of the market. So your trading is not against the trend, but is in line with the existing trend of the market. So we'll come to our H1. So you do your analysis of the trend on 4-hour time frame. Your entry is either on a H1 or on a 50-minute time frame. So look at what happened here. In this scenario, price pull back towards the moving average. So you can pick up your trend line this way and trap the price. Do you see that? You can trap the price once it begins to pull back. And another way you can do it, you can wait patiently, price pull back, get a rejection from this moving average. You see this bullish engulfing candle, that is your entry if you are aggressive. Now if you are conservative, you wait for price to break above this trend line, and then that will be your entry. Your stop loss is always below the moving average. So you can see how that plays out. Again, in this scenario, you will have it marked out this way. So you can make your trading decision from that zone. The same thing is applicable to this. So you can see this. Now what do you see? We have this pin bar here. Can you see that? This bullish pin bar. So that would have been what? That would have been our buy entry. So that bought here, and then you can see the movement of that price to the upside. Very simple and straightforward. Again, you can see this. So here is your entry, bullish engulfing candle. So these patterns are very much repetitive and they keep happening often. Remember, price always respect this pattern due to the nature of how gold always move. So you can see that entry there, and this happens on and on. So here is to our 15-minute time frame. A 15-minute time frame, this is one entry. You can see that after that particular one, we have this pin bar here. You keep getting the entry on and on. Here again is another one. So the advantage of the lower time frame entry is that you get to have a smaller stop loss. So as for this, this would have been your entry. That's your entry. Even in this scenario, you still have your entry. So here again, you keep getting your entry, and that is exactly how you will do it. But first, you must determine your trend from the 4-hour time frame. So this is effective, this is very much simple, and it is easy to drive at. I believe you have gained value, you have learned something new. Please do not forget to like, share, and subscribe. Thank you, and see you in the subsequent video.